about that. It's getting old stuff is not for wimps. Okay. Here we go. Ready to roll once more. Let me get my act together on the slides here. Come on now. Hang on just a minute. I swear they were all here, really. Give me 1 second, folks. We have a little bit of a technical challenge here, but we will get it fixed. Oh, you know, having multiple screens is a cool thing sometimes, and other times not so much. Where in the devil did it go? Okay, I've gotten my act together. All right. With that, proving beyond a shadow of a doubt, you don't have to be too smart on the computer to do this business. There we are. Okay. So we were in this part of the presentation, which is the disclaimer. Information here that we may represent may be exceptional, not typical results. Members have the option to receive commissions. Your results could be different. Profit amounts cannot be guaranteed. There is a high level of risk involved when trading leverage products such as Forex and CFDs. It is possible that you may lose the entire amount of your account balance. Past performance is not an indication of future results. Only trade with money you can afford to lose. You'll hear that several times during the presentation because it's important. In other words, don't use the rent money. Don't use the money you need for food. You know, that's not prudent. You should not trade or invest unless you fully understand the true extent of your exposure to the risk of loss, and copy trading services imply additional risks to your investment due to the nature of such products. If the risks involved seem unclear, this option is not available to people in certain countries for legal and religious reasons. If necessary, ask your sponsor for a list of excluded countries. Again, never risk funds you cannot afford to lose, and always look to withdraw your initial risk capital as soon as it is earned. That's what we call de-risk. So if anything after that received is pure profit. So there we have the risk out, or the disclaimer out of the way. For those of you that don't know me, my name is Robert Burns. I'm 64 years old, here in the Seattle, Washington area, and clearly have a frog this morning and some technical challenges, but I will persevere. Married to a lovely woman named Anna. We have a daughter and a son, and our daughter is in Romania. We're going to visit her. She's about to give birth to a baby boy. We're excited about that. So we're going to be in Europe for a couple of months. For fun, I love to fly fish and I play bass guitar. In fact, I was doing that this morning to get my energy right before this call. And last but not least, my professional resume. I've been in Forex, real estate, crypto. The common theme in most of the things that I really enjoy doing are numbers and making money with money. So that'll be a focal point today because of my background. That's what I enjoy doing, and I hope that comes through. And last but not least is internet marketing and team building, which is a part of this today that you'll see, although you don't have to do that part. It's optional. So with that, I'm going to go over the credibility and the maturity of the broker. You'll see that, which is really critical. You'll see the transparency and the performance of the traders. I'll show you how you can make money. Again, optional if you choose to refer clients here. And then we'll take a quick break and we'll get into a Q&A after our guest comes on the call today. So with the trading in mind, what I'm going to go through is, what is copy trading? How is this broker solid? What about the broker is solid? how do you de-risk by getting withdrawals of your money out? And then I'm going to show you some things that are really powerful with a concept called compounding. And compounding is something that, well, you'll see when you see it. It's if you haven't seen it, it's an eye opener. Albert Einstein literally said, compounding is the eighth wonder of the world, and old Albert was right. And with copy trading specifically, what I want to touch upon with copy trading is that these are human traders. These are traders that are trading on your behalf. It's not a robot, although some of them may be using robots and they disclose that. But I personally, and I think most people here, prefer the human traders because the trader then can respond to the market as it changes, which it inevitably does. And they can do things a robot will never do. So we're going to get right into that. First things first, I want to share with you a little bit about the broker. So this broker is one I really liked before I was even familiar with the copy trading aspect and running across this wonderful fellow from Ireland that exposed me to this, Robert Russell. I like this broker, and I literally had them on a short list of brokers that I wanted to use. I do my own trading and am learning to trade. And because of the ratings, because of the reviews, because of the credibility and their age in the marketplace, I like them immediately. And turns out that is certainly panning out. Here is one of the things that jumped out to me. This is not a baby broker. This is a broker that's been around a while. You don't gain a clientele of 4.5 million people in 169 countries quickly. That's something that you have to achieve over a period of time, and they have. They also have regulation in the country of Belize. FSC is the regulatory body that monitors RoboForex. Also, there's the Financial Commission, which is, think of it kind of like an arbitration company or an arbitration organization that RoboForex is one of several good quality brokers that participates in it. So if you get into a dispute over a trade with RoboForex and you prevail in their arbitration process, you could be awarded up to $20,000 to compensate you in the event that your opinion is the one that wins. So that's kind of a nice, a gesture on their part to participate in that type of coverage. The type of instruments that the company has are in the area of Forex, of course, cryptocurrencies also, Bitcoin, Litecoin, Ethereum, and so forth, stocks. You can trade stocks on here, indices. One of personally my favorite instruments are indices like the US 30, the DAX, which is the German 40, the US 100, which is the top 100 tech companies in the US, and similar type of indices. Those are available to you as a client of the trading. Also, there are ETFs, exchange traded funds, soft commodities, things like sugar, corn, cocoa, etc., energies, oil, and so forth, oil and natural gas, and metals, one of which is one of the favorite instruments of virtually everybody that's here on the call. Once they become familiar with some of the traders, trading gold has been a very profitable enterprise. This is something that's really significant. You can see why this broker was on my short list. These are some of the things that I saw. In other words, they have very, very good reviews from independent press and independent media. Excuse me just one moment. I got to get a drink here. You can always tell it's springtime when the allergies rear their head yet one more time. Now, on the traders, one of the things, again, that is such a powerful concept with this model is the idea that you have a whole bunch of different traders that you can choose from. And we are constantly looking at them as a team. We're constantly evaluating them behind the scenes. We're constantly monitoring them to make sure their performance is right. And then, we get that information out to the organization by providing it to the people that we enroll, and then the people that they enroll provide it to them, and so forth. And one of the things that's really critical is having transparency with that. In other words, And again, what I'm about to show you, this is an important concept. Again, you know, I said I would revisit this. Again, never risk funds you cannot afford to lose. It's very important that you follow that, because we don't want anybody to get a bad outcome. And if you have, you know, things happen in this market, you know, when there's risk, you can make money, but you can also lose money. So just it's smart to be prudent in the process. So here's an example of a trader. This is something we're going to do weekly. And this is a trader that I'm using personally. Many are using the same trader. I'm not going to share with you who the trader is, because what we're doing is having people go to their sponsor to get that information. But this literally is up to date through last week. As you can see, this ended on March 29th, his trading. And on March 29th, he didn't trade the 30th or the 31st, still managed to eke out a better than a 9% return for the week, which was an exceptional result considering he didn't trade 2 of the days of the week. So, you know, in my case with this trader, I started this account, this particular one with this trader on March 19th. He started trading it on the 20th, this account, and you can see the results here. He has been averaging 1.71% per day. At its current clip, that's a 24% return per month, with a 5.62% drawdown. Now, if all of this sounds like Greek to you, don't worry. We'll get into the explanation on Q&A. But drawdown is very simply, you know, the return is pretty, you know, hopefully self-evident, but you know, and overall gain 24% so far. Drawdown is your unrealized loss. You want this number to be low. You want these numbers to be high. You want this number to be low. And this particular system is one that we're going to share with people. You know, if you're inclined to evaluate numbers and look at the numbers of your own trading, we have a way of helping you get up to speed on this very same system called MyFX Book. It's free, and it's a terrific system for monitoring traders. Here's a trader my colleague Robert Russell is using. I don't know who this is. He didn't share it with me, and it's good, because we're going to keep it that way until he says, hey, this is one I really like. They've passed the test, and he says, this is one you should tune in on. I'll go, okay. But look at this. Look at this. I mean, 3.41%. Now, he hasn't been trading it very long, so that number, all of these numbers change daily. But so far, I can see why he's enthusiastic. Wow. 14.35% just in a few days of trading, very low drawdown. When you have these kinds of returns and a low drawdown, that's a very clear indication that you've got a good trader in front of you, you know, that you're taking a look at. Also, one of the key things to reduce your risk is to withdraw. In other words, deposits are important, of course, but also withdrawing money regularly. And I'll show you, you know, how to do that in a systematic manner. It's something that is really critical. And what you'll see in many places around the world now, there are, my daughter is actually working with this account, which is how, as an American, I'm here. She's a dual citizen. She's a Romanian citizen. So daddy is helping manage the account. And with EU countries like Romania, where she is, crypto was just recently added, like in the last 2 weeks. And so we were tickled the day that we noticed that. The UK still does not have crypto, and some countries, I believe, in addition to the UK, don't have crypto as a deposit method. So you may or may not have some of the things here, but here's the central point. You have some very powerful ones like Visa and MasterCard. You have additional systems that, again, are country dependent, like Revolut, like AstroPay, like Advanced Cash. But the biggies are Visa and MasterCard, and those are available literally everywhere. So you can get money in easily and quickly, and you can get it, maybe more importantly, out easily and quickly. So what is compounding? I said I would share this with you, and what I want to do, I've created a quick little hit list here. Who do we have on the call that are guests today? Can you type the word, can you type the letter G if you're a guest on the call today in chat? Find chat down in your toolbar and type the letter G. Okay, Hazel, welcome. Welcome. Who else do we have, guys, on the call today? I just want to play a little bit here and have some fun with the folks on the call. Okay. Wow. You're gonna give me the test right from the beginning here on pronunciation. Thangliansium. Well, you'll have to come on mic and help me when we get there. I'm probably butchering your name, and I apologize in advance. Can I just call you Thang? Would that work for our purposes today? And is that your first name or your family name? So we've got Steph, we've got Hazel, and we've got Thang on the call today that are guests. Terrific. Welcome. Glad you're here. What I want to share with you right now is these are the parameters I'd like you to type in. Okay. I'd like you to say, okay, and this is once you've engaged in the trading, assuming you want to, join us, you put in the smallest amount possible to test your account to see how all this works. Not in all cases, but in many cases, that's $100. You can try this out and take a test drive for $100 and literally see it work live. Okay. So if you chose to do that, now, once you've done that, and let's just say for the sake of discussion that you like what you see, you say, okay, that looks like something I want to put more money in. What would that amount of money be that you would put in, assuming, and we're not going to hold you to this. If you decide this isn't for you, no worries. But what would be the amount of money in initial capital that once you've done your own testing and, come to the conclusion that this is worthwhile and worth doing, what would you put in? Then the next question is, what would you want to use as a rate? In other words, the percentage that you would want to see it compound on a daily basis. And then lastly, on this list, what is the time frame that you'd like to leave that money in there to compound? We'll come back to how you can incorporate withdrawals and de-risk and all that in a minute. But these are the concepts, the three things that you need to do compounding. One is the capital, one is the rate, and one is the time. Those are the parameters that go into doing this computation. And I'm going to show you how this works here in just a second. And in fact, I included the calculator when I sent this to you in chat just now. So if you check chat, you'll see that the calculator is right there. Now, I'm going to pop over here for a minute to here. And assuming my technology is going to behave here, a little technical challenge in the beginning there. It's good. Keeps me on my toes. So here's our calculator. So who wants to play? Please type Y if you're a guest and you'd like to play, and I'll use your numbers. Who would like to do this? Just type Y if you're a guest on the call, one of the three guests, and that you'd like to play. Just type Y, and then we will include you. Okay, Steph, you're up. So let me find you in the list here, and I'm going to unmute you. Ask you to unmute, I should say. So go ahead, and Steph, if you could come on mic, that would be great.
Yeah, I'm here.
Terrific. Where are you from?
Yorkshire, England.
Okay, excellent. So let's say that your test is out of the way. You liked the trader. Let's say that we found a trader, whoever your sponsor is, and recommended a trader and said, this is one that they're using, and you go to them and you try them out and you like them. What would be the amount of principal that you would be trading with after you have had that initial test pass?
I'd be looking at about 20 grand, I think.
20 grand. Okay. Good number. And what rate would you like to use as far as the interest rate?
As in percentage wise?
Yes.
Yeah. So I don't know. I'd expect like 2.5% a day is probably a good
5% a day would be pretty rosy. I'd much rather see a much lower number. Let me give you just a little help on this one, because
I'd say 2.5%.
Oh, 2.5. Even that I think would be a little bit high, and certainly we can use whatever number you wish ultimately. But I want to show you from our presentation just a number that, in the interest of keeping it real, is right here. Assuming I can get this a size we can see it. Hang on a minute. Right here.
So if we say 1%, that's quite a good number then.
You see daily right here, 1.71%. That's the gross percentage. But what we have to do is we have to take that down a notch, because this particular trader charges 35%. So if we took 1.71, and I didn't intend for this to be math class here, but them's is the numbers. If we take the 35% off, we're actually at 1.1% on a real, no kidding, just happened this week number. Does that make sense?
Yep.
Okay. Very good. Now, if I use that number, and how long would you like this to go for? A year, 5 months, 2 years? What kind of time?
A year to 18 months.
Say again?
1 year.
1 year. All right.
Yeah.
Now, let me ask everybody here, what do you think the number is going to be on Steph's outcome here if we let this bad boy roll for a year? What do you think that 20K is going to turn into? Now, keep in mind also, we have to make a key choice here, guys. And when you're doing this, you want to be mindful. If they just changed this and made this much more clear, if you click no here on include all days, notice Saturday and Sunday is not included. Why not? Forex is not open on those days. It's only open 5 days. So we're including the 5 days that it trades, earning 1.1% a day for 1 year. What do you think the number is going to be? Type your number, 200K. I have one participant so far. Come on down, ladies and gentlemen.
About 236.
How much?
236.
236, says Steph. Okay. What about everybody else? What do you think the number is going to be? Come on, guys. Type in chat what you think the number is going to be. We've got a 300K from Derek. Okay, Derek.
Huge.
This is fun. I feel like a game show host. Okay. Couple of million. 60K. Man, this is all over the map. I think close to 1 million. 375 from Emma. Jan, close to 1 million. Okay. Suspense over. Here we go. Calculate. Ready? Go. There it is. 20K in that period of time, earning a 1.1% rate, would turn into $347,000 in a year. That's a 1,638% return. Holy smokes. Holy smokes. Now, you said 18 months earlier. Let's just see, shall we? Because keep in mind here, these are the monthly outcomes. And guys, this is just math. This is just math. I mean, this is not me making up some puffy number. This is something you can actually see manifest in your own case. Whatever number you start with, and assume that probably the most important part of this is the consistency of that rate, of each day it comes in. And I'm actually liking that we chose the trader on the current numbers, because if I chose Robert Russell's trader, the numbers would look ridiculous. You'd see them and they're unbelievable, because they're so much higher with that trader that he's using. But that number will come down as it averages out. But look at this. Here's your earnings, and you started with 20K, and by May you've earned $7,100 right here. By September you're at 17,000 a month in profit now in earnings, and this over here, this column is your account balance at the end of each month, what the account balance is, and then the starting amount for the following month. Holy smokes. Yeah. Right? I mean, now let's go back and let's pop in, Steph, your number was a year to 18 months. Let's put an 18 and let's say, okay, ready, go. Huh. Wait a minute. That was the rate. I think I changed. That was 18 years. Okay. You're now the richest person on the planet. See how good I am? Let's put in 18 months. We're having fun. Okay. Compute. Remember 347 was the number. Look what happens when you added 6 months.
Crazy.
Wow. Now, we had a conversation earlier about the import of getting your money out, right? In other words, reducing your risk, de-risking, as some people call it. How would you do that in this plan if you started with 20 grand and you said, before I play in this kind of compounding scenario, maybe the first thing I want to do is get my money back, right? In other words, get the return of your initial capital. The way you would do that is you would come down here, instead of reinvesting 100%, reinvest 5% on this one. They don't actually let it go to zero. So you have to reinvest a little bit, but 95% is going into your wallet. Okay. If you did that, this is what the numbers would look like. You would earn a total of 96K on your 20K. Your investment value would be 24, and you've taken out $91,000 in cash. Now, you wouldn't have to do that to that extent, but you get the idea. You can set this up where you say, okay, this is the amount I'm reinvesting. This is the total earnings right here by the month. This is the amount I'm reinvesting, and this is the amount of cash you've taken out. Here's an easier way, maybe more clear way to do this, is if you leave it at 100%, like that, like we did originally, keeping in mind Steph put in 20 grand. Her objective is to get that 20 grand back out. Right here at the end of June, it's 40 grand. That means you've gotten you have your 20 plus the 20 in profit. Everybody following me?
Yeah.
Okay. Now, if you do that, you would take out 20 right at this point and start fresh, but you've gotten the return of your capital. Does that make sense?
Yeah. I know that's by June.
Sorry?
I said, I know that would be by June, so not very long.
Yeah, not bad on this time frame. In other words, at the end of June, by the beginning of July, you would have the return of your capital and then 20 that was profit in the you know, you're playing on the house's money. Does that make sense?
Yeah. Yeah. Definitely.
And this is a way, guys, of de-risking completely. So you defer the gratification of having the compounding for a couple of months, but you now have completely de-risked your capital. That's pretty cool, right? In other words, at this point, then you let this bad boy roll, and you saw what it can do if you just simply compound. And you can do all kinds of things with this at that point. Let's say that you started and you say, okay, I'm going to let it go until July 1. Or I'm going to remove all the money as of July 1 right here. You've taken your 20 grand back out. You're now starting again with the house's money on July 1. And then you can do things like this also. I mean, you know, you saw the number here where it was looking pretty attractive as far as total earnings. You can do things like this. You can say, let me see what it looks like if I take 50-50 and I leave in 50% and I take out 50%. Your total earnings are going to be right here, 305. Your investment, as far as the size of the capital in your account at the end of this, would be 172, and you've put 152 in your pocket. Now, I don't know about your standards in the UK, but here in the US, I'd be real tickled with 152 in cash and still have money in the market of 172. That'd be pretty cool. And I suspect it probably is pretty cool anywhere. Right. In other words, this is just an amazing outcome. And you can do other things. You can say, well, I don't need that much cash. What if I left in, instead of 50%, I left in 80% and I only took out 20%. In other words, I'm going to reinvest 80. I'm going to take out 20. What does that look like? Here's the column where you're taking cash out. Here's the amount you're reinvesting. Notice you still got 150K by the end of the year, or end of 18 months, I guess in this. No, did we? I think we left it. Yeah, still 18 months. This is the amount you've taken out. This is the amount of asset value that you have in the market. So this guys is such a powerful thing that you can look at and play around with the numbers on. And I've provided that link to you. You know, we'll go over this in more detail. I just wanted to hit the high points on this, but this is why people do this. I mean, can you imagine? You know, and here's the part that's most exciting. You look at all this initially and it's like, okay, that's interesting academically, right? Wait until you see what happens when you actually see it on your own account and it's working. And you go, wait a minute, that's not just academic. It actually works. This math actually manifests. It's crazy cool when you see that. And you will see it if you know, act in a disciplined manner with your account and follow this process, you know, develop your plan and then execute the plan. It's crazy cool. You know, imagine 20 grand turned into 625 in asset value at the end of 18 months, and you've taken out 151K and put it in your wallet. You've got 7 times the earnings in 18 months that you started with, and a $625,000 asset. And watch this. Let's go 6 more months just for the hell of it. Let's say 24 months. You know, so you see, okay, 2 years. Here's what it looks like. You've got an asset value at the end of that 2 years that's worth 1.9 million. You've taken out 479 in cash on a 80-20 split. You put 80% back in, you took out 20. You can play around with the numbers, you know, and see what is more to your liking. And again, it's just math. Assuming our guy or gal that's trading is getting a 1.1% rate with consistency, And sometimes they won't. It'll go up, it'll go down. It's real trading. But you see the power of this and how this, this is how you make money and mitigate risk. In other words, the mitigation of risk is pulling your money back out, and then you're using your profit to generate additional asset value. If you can do that, and get this kind of a result, you see why people really, really like what we have here. So enough on compounding. I wanted to show you that so you'd get a sense of the power of that. Let me get back into where we are here. And Steph, thank you for playing. I appreciate that. Let me see here. Let me get this over there. Okay, there we go. And off we go. So, these are the key things that I wanted to show you, and I just wanted to review. We went through copy trading, how to, selecting brokers, the withdrawal process, and then of course, daily compounding, which is such an exciting concept. On Monday, this is our BAM fam, book a meeting from a meeting. On Monday, we have our colleague, Robert Russell, leading a masterclass on how to get all of this stuff put together. And that's what that class is about. It will walk you through all the steps to get set up and running, how to get plugged in, how to get everything turned on. And if there's one concept I can convey to you that makes this such a powerful idea, it's simple. Once you get plugged in, you can just monitor it. You don't have to ever learn how to trade if you're not inclined to do that. It's simple. Trading is hard. I'll just be blunt and candid. Trading is difficult. It's not for everybody, but here you're not having to do the trading. You enjoy the benefits of traders that are good traders and working, with them, having them work on your behalf. Wednesday, we have an event just like this one. Both of these events, the masterclass and this one, are at 8 p.m. GMT or whatever time that is for you, depending on where you are in the world. And then each Saturday we have this one. The first part of this is the opportunity. The second part will get into a Q&A and help you walk through how to do this right here on the call. So we kind of combine both things on this call on Saturday. And if you're interested in moving forward, what I would encourage you to do is get together with the person that referred you here, get their link, do that right now. Reach out to them. If you like what you've heard and you say, okay, I want to take this for a spin. We're not talking about huge money here. In other words, you can test out most of these traders for $100, and see how it works for you and get a sense of how it works, and again, I don't know what things are like in different parts of the world, but you can't get a good meal for $100 here anymore after inflation post-COVID. It's pretty hard. Take your spouse out for dinner and you're going to spend $100. I submit that the relative amount of risk here is worth it to try it and see how it works, and see if it's going to work for you as it has worked for others. Now, what I'm about to show you now is completely optional. And that is the affiliate aspect of what we do. This isn't something that you have to do, certainly. If you choose to do it, you can augment your capital a great deal. So what we're going to do is I'm going to get into how you're paid. There are basically two affiliate plans. There's one from RoboForex, which is on the broker fees, meaning spreads, commissions they charge, and so forth. We get paid on that. We get paid on that over 5 levels. The other is from the trader split. In other words, depending on which trader you choose and you refer to other people, you get paid a percentage of the profit that trader creates. So I'll show you some examples of that. And here's the punchline. This is simple. It works. You can add it to your trading or withdraw it, and you can add it to your account capital to compound. So, your choice, it's your money. You can do with it as you wish, but those are some of the options that people contemplate. Now, there are no payout limits. There's no daily. There are daily payments. If you choose to withdraw them, you can. If you choose to have them go into a trading account, you can. It's your choice. It's your money. No deal restrictions, no bonus restrictions, 24/7 support, and simple analytics, which I'll show you here in just a minute, so you can see exactly what you've earned. And these are the different ways that we're paid. First way is, of course, what we already covered with the trader. The trader trades on your behalf. You make whatever that trader generates on your account per day. Then you're paid a direct percentage of the people that you enroll. You get a percentage of the profit that the trader has created for your clients that are direct enrollments of yours, meaning your personals. And then on the next point, point number 3, you receive commission from 5 levels deep. And I'm going to show you here in just a second. This is one that candidly I was kind of dismissive of when I first saw this, because I didn't really, the light didn't turn on until a few weeks into the process. And my colleague, Robert Russell, said, no, don't discount that too much. I think you're going to discover it's pretty good. And man, was he right. And last but not least, there's a loyalty program that it pays you an additional bonus. So this is an example of how this works. If you have $5,000 in your account, and let's just say that the trader in a month earns 23%, and I'm not guaranteeing that they're going to earn 23%. It may be more, it may be less. It varies, but let's just say for our example, it is 23% on a given month. That would be $1,150 in gross profit. What the trader then does, one of the traders that we use, that trader charges 30%. So you take 1150 multiply times 0.7. This would be your net on that trader. Okay. Your net would be 805 in that case in your trading account. Now, let's say that you go out and you enroll 5 people who do exactly the same thing that you just did. And you just heard from somebody on here that isn't going to have a $5,000 account. They're going to have a $20,000 account. So, that's one person that's 4 times this size. And, and that's what's so exciting. You don't know what somebody's going to put into the market here until they do, but you can get some kind of indication, and it can surprise you. So here's 5 people putting in 5,000. That's 25,000 right there. Again, 23% in the example. That's a $5,750 gross profit. Multiply that times 0.3, and you have $1,725 in gross profit. With this trader, this particular one that we're showing in the example, they offer a 50-50 split. So you would have $862 from trading profits. Pretty good, right? In other words, and again, you can withdraw that. You can add that to your trading capital. Completely your choice what you want to do with that. Now, here was the part that I was dismissive of initially. It's a 5-tier compensation plan, 35% on first level, 20% second level, 15% third level, 12.5% fourth level, 10% fifth level. I was like, oh yeah, okay, whatever. I made a mistake. I was wrong. And also you get paid a bonus, which actually came in today. If you earn somewhere between $100 and $500 on that 5-tier plan, you get a 10% bonus that's paid on the first of the month. If you earn $500 to $30,000, you get a 15% bonus. If you earn 30,000 plus, you get a 20% bonus. And this again, guys, can add up. And what I want to show you is I want to show you an example in my own case that really just it provides evidence of this in a big way. And I'll show you, complete transparency here. I have $185,760 assets under management on my team. My team now is down just slightly into level 4. We haven't even cracked level 5 yet. And so $185,000 is on my team that's being traded. Okay. Here's what happened today. Okay. That's $105 right there that came in today. In additional income, this is from the 5-tier plan that I was just showing you. Okay. Now, Robert's numbers make this pale by comparison. As an example, he is killing it. And the thing is, he's 2 months, 3 months ahead of me, something like that. And the cool thing is what I was dismissive of, this is adding up to about $500 a week. Wow. $2,000 a month just from this. And I can take that and I can put it into the trading account. I can withdraw it. I can do whatever I want, but just to show you real evidence and real size of organization, it's not nearly as big as Robert Russell's organization, but I'm going to give him some competition, I hope, and see if I can catch him, and that's the possibility. You never know who you're going to enroll. And, Robert, I think would tell you very candidly, we didn't know each other from Adam 3 months ago. I stumbled on a Facebook post that he made, and it caught my attention because I'd already seen RoboForex. And I said, well, what's this copy trading about? And one thing led to another, and voila, here we are. And, I'm sure I'm not the best affiliate on his team. I'm also sure I'm not the worst, so I'm sure, I just say that because what happens here sometimes can be very serendipitous. It just happens. It just comes out of nowhere. And this is one that for me, I am delighted with the result so far. I'm adding it to my trading capital. I'm increasing my trading capital. I started with $1,100 altogether. And by the way, here's the trader commission. It's not very big because there's been a lot of days without trading this month for one reason or another. But here was my trading commission that came in. This was the trading commission, the trader split. So I show all that to you just to give you examples, real examples that are not they're current and up to speed. So with that, let's see here. I want to go right back here. We'll wrap this bad boy up, and then we're going to bring on a guest and have you hear from somebody that is a guest on the call today. So again, what I covered with the affiliate plan, it's simple. It works. As you saw, you can add it to your trading account. If you wish to have it compound, you can withdraw it and go buy groceries or gas, whatever you want to do. And if you do add it to your trading account, it can help your compounding rapidly increase. So it's a very, very exciting concept. So at this point, if you're interested in moving forward, get together with the person that introduced you, get together with the person that would act as your sponsor, and get their link. And after we do the Q&A section that we're going to come up with in part 2, the Q&A, and we'll get into how you can enroll and the different steps if you have any questions on that enrollment process. But with that, that's the conclusion of our call. This part of the call, what I'd like to do now is switch back to Robert Russell and have him tell you about our special guest today.
Hey folks, powerful presentation, Robert, I have to say. As always, so much info, guys. Folks, our special guest was on a time limit, and I think it ran out on us because he's in Thailand, and the time difference between him going to dinner, I think the time ran against us. But I did send him a text, and I said to him if he can join in the next 10 or 15 minutes, do. So folks, we'll just talk about question and answers, and if he does come back, we'll get him on the call. But as they say, it's a time zone difference. It's very late at night over there. So folks, if anybody's got any